Hi there, I'm Blaine Bertsch, co-founder and CEO at Dryrun, with this month's State of the App. And for this month, I wanted to talk about the frequency of forecasting. Now, the reason I'm talking about this is because we hear this question from business owners all the time. How often do I need to forecast to see a benefit? We also hear that from CPAs advising their clients. They'll ask us, how often do clients tend to want to see these forecasts? What's the frequency that's right to give them a real benefit and true value? We always like to say that even a little bit can make a big difference. But if it's too little, you're not getting the real benefit of having just that proper rhythm for your business. Now, I will say that's the real key, is what is a proper rhythm for your business, because it can differ quite a bit from business to business. Now, on one side, you could have a business that's well established, very regular sales pipeline, very regular cash flow. It's just rinse and repeat. They likely don't need to forecast all that much to see a really solid benefit. Now, they're going to want to for sure forecast for the year, their annual forecasting, get an idea of where they're headed and what their goals are. They're going to want to forecast on a quarterly basis and make sure that they're on pace and, looking at last year and the seasonality of last year. Is it mapped to this year? Is it similar? They can see a real benefit from a little bit less frequent forecasting. But the businesses that really thrive on forecasting and can see a massive benefit are the ones that suffer from true volatility in their cash flow and their sales pipeline. These are the types of businesses that chronically have a ton of overdue invoices. People owe them money. They're trying to figure out when that cash is coming in the door, making sure they have enough money to cover their expenses and cover the big bills that are often sitting on their desk as well. Those businesses that have that big volatility in their cash flow need to be forecasting and need to be managing that cash flow on a week-to-week basis. They're going to see a real big benefit if they really up the frequency and make sure they're staying on top of it. Now, those businesses with a lot of volatility in their cash flow and their ARAP oftentimes have truly volatile sales cycles as well. That means they have a lot of peaks and valleys from month to month in their sales. When they've got a peak, they're often at capacity or over capacity. And as soon as they're over capacity, they're paying overtime, they're hiring contractors, they're chewing into their profit. And really, generally, a lot worse than that are the slow months, those valleys. Oftentimes, they're actually below the break-even point, and the business is burning cash. Now, when you can see those peaks and valleys ahead of time, you can start to adapt to them. The high months, you might be able to negotiate some different start dates and end dates and just smooth out that cash flow volatility. In the low months, they can see far enough ahead, they can start to increase their sales activities and marketing activities and try and fill those low months up with some more revenue, with some more jobs. So they can benefit a lot from the cash flow side, likely forecasting on a weekly basis. To see the volatility in their sales cycle, oftentimes they're going to want to at least look at those forecasts on a monthly basis and have that frequency of just knowing exactly what's coming down the pipe in the next 6 to 12 months. And of course, they're still going to want to do quarterly forecasting and annual forecasting, but those tend to be a little bit more about setting goals and ballparking for the business. So you can see that the frequency of forecasting can vary quite a bit from business to business, but I will again emphasize that a little can mean a lot. So even just doing a little bit of that forecasting, even quarterly, is going to have a really big impact compared to just running blind. But for some businesses, monthly is going to be essential, and for some, weekly, even multiple times a week, staying on top of their cash flow and understanding what's happening in their cash flow down the road in the coming weeks can have an enormous impact on the business, not just in lowering the risk, but especially when you start looking at the sales cycles, it can mean a big difference in the amount of revenue they can earn, and it can mean a big difference in the profit margin when they start to take those low months and bring them up above that break-even point. So I will add, that's what we do at Dryrun. Of course, we recommend you forecast in any which way you can to make sure you're on top of where you're headed as a business. We have software that can help you do that. If you'd like to come and check us out, we can help you stay on top of your forecasts and are happy to talk with you anytime. So just come visit us at dryrun.com. Thanks.